Hey everyone, and welcome. Have you ever stopped to think about how to really protect everything you've worked so hard to build? Well, today, that's exactly what we're going to talk about. We're breaking down how to build your own financial safety net. A solid plan to guard you and your family against whatever curveballs life decides to throw your way. So let's get right into it.
Look, we all know that life can be, unpredictable. That's a given. But what we don't always think about is the financial risk that comes along for the ride. And this isn't some far-off, abstract idea. No, this is something that impacts every single one of us, no matter how much we plan ahead. So let me ask you a straight-up question. And I want you to really think about this for a second. If something completely unexpected happened tomorrow, a serious illness, a bad accident, maybe even losing your job, could your finances actually take that hit? It's a tough question, I know, but it is so important to ask.
And the honest truth is, a lot of us just aren't as prepared as we think. Get this, a report from PwC Malaysia in 2023 found that only 56% of Malaysians have any kind of insurance or takaful coverage. That means almost half of the population is potentially walking on a financial tightrope without a net. And that right there is exactly why we need to talk about this stuff. Okay, so we've established the problem, right? Risk. It's everywhere. So let's flip the script and talk about the solution. And this is where insurance and its Islamic counterpart, takaful, step onto the stage. Try to think of them not as just another bill to pay, but as your own personal financial safety net, literally designed to catch you when you fall.
At its heart, insurance is a really powerful concept. It's a simple deal. You pay a small, manageable amount, that's your premium, to a company. And in exchange for that, they promise to cover the cost of a much larger and unexpected loss if it happens. What you're really doing is transferring that massive financial risk from your shoulders onto theirs.
Now here in Malaysia, you're going to see two main models. You've got conventional insurance, which is that direct risk transfer deal we just talked about, but then you also have takaful. Takaful is really cool because it's built on Sharia principles of mutual cooperation. It's more like a community pool where everyone contributes to a shared fund to help each other out when someone needs it. The whole idea is based on solidarity, not just a business transaction.
And this whole system, whether it's insurance or takaful, it's built on a foundation of fairness. There are some core principles that make sure it works. Utmost good faith just means everyone has to be completely honest, no secrets. Insurable interest means you can only protect something that would actually cost you money if you lost it. And indemnity is a big one. It makes sure the goal is just to get you back to where you were financially, not for you to make a profit off of a loss.
Okay, so the concept makes sense, but how does this actually apply to your life? Well, it all comes down to picking the right tool for the right job. There's really no one-size-fits-all policy. Different types of coverage are designed to protect very different parts of your life. We can pretty much break it down into three main buckets. First up, you have life insurance or family takaful. This is the one that provides for your loved ones if you're not around anymore. Second, there's general insurance or takaful. This covers your stuff. Think your car, your house, things like that. And third, you've got medical and health coverage, which is there to tackle those big hospital bills if you get sick or have an accident.
And a perfect example of this in action is the medical card. You've probably heard of it. Honestly, you can think of it like your VIP pass to healthcare at panel hospitals. Instead of you having to fork over a huge amount of cash up front and then wait to get it back, the insurer just handles the bill directly. It is a massive stress reducer when you're already going through a tough time.
All right, so having that safety net is great, but knowing how to actually use it when you need it, that's just as important. A lot of people get worried that making a claim is going to be some long, complicated nightmare, but it really doesn't have to be. Let's pull back the curtain and see how it works.
It really just boils down to 4 simple steps. First things first, you report what happened to your provider. Do it as soon as you reasonably can. Second, you fill out their claim form with all the details. Third, just cooperate with them if they need to ask a few more questions or investigate. And finally, you receive the payment you're entitled to. That's the basic flow of it. See? Not so scary.
Now, to make sure everything goes as smoothly as possible, here are a few pro tips. And the biggest one, by far, is this. Understand your policy before you ever need it. Know what's covered and what's not. Then when something does happen, act fast, be 100% accurate and honest on your forms, and keep a paper trail of everything. Doing this puts you in the driver's seat and makes the entire process so much easier.
So, we're going to end with this one final thought for you to chew on.
We often get caught up on the cost of the premium, right? It's a known, predictable expense. But the real question you should be asking yourself is about the alternative. What is the bigger risk? Is it the cost of that premium, or is it the potential cost, financially and emotionally, of being completely unprepared when a crisis hits? When you think about it that way, it stops being an expense and starts looking like a vital investment in your own peace of mind.